Well, hello everybody, welcome to the Forex market analysis session. My name is Alexander Nikitin, and in today's video I will analyze my whole portfolio of 19 pairs. Okay, the patterns that I'm going to use are these: ciphers, butterflies, and custom pattern. By custom pattern I presuppose my unified Gartley. It is the pattern that unites the features of a Gartley pattern and a back pattern, and if you're interested, here are the details for that pattern. Okay, basically the minimum B point is 0.441, maximal B point is 0.736. Then we have the minimal C point is standard 382 and 1. The completion of that 786, and the invalidation is pretty standard, 5% above the X point. Okay, let us start. Euro dollar we have nothing for our daily, for our nothing. This 1 hour is invalidated, 30 minute is nothing, and 15 minute is nothing as well. Okay, switch to the next pair. Dollar yen butterfly on daily. Okay, we have a butterfly on daily. I already have it in my watch list. I created this Excel spreadsheet. It looks this way. So here are time frames, here are my pairs. I will share the link to this Excel spreadsheet so you can open the Excel online and have this watch list by your hand. The link will be in description as well, next to the link to my website. Okay, so this is the butterfly advanced formation, pretty far from completion. And here what I want to discuss today is also the invalidation factors, or let's call them warning signs. Okay, there are 4 warning signs that should prevent you from placing limit orders. Of course, sometimes you can enter trades with limit orders, sometimes you should wait for a confirmation, and there are 4 warning signs that will tell you when you should use a limit order or when you should better look for a confirmation. And there are these. I will create labels so you have it on your screens. The first warning sign is a large expansion bar. So the large expansion bar is the bar that has the range twice greater than the average range of other bars, and the period of average range should be 30. So if you go to open your, if you wish to stay mechanical, you just attach the average true range. Maybe I'll select this average true range period 30, and the large expansion bar is the bar that is twice greater than that. For example, if you go here and you see the average range as 67 pips on 67, no, 670 pips at this bar. Let me make it this way. So what is this bar? The average true range, it says 671 pip for this bar is the average range. So if it is twice more, then it would be a large expansion bar, and it is 1250. So just go to divide 1250 by 671, and you see it is almost a large expansion bar, but not yet. So this one is not the large expansion bar yet. Okay, if you want to stay mechanical, of course these large expansion bar are something that stick out, that jump into your eyes. It jumps but not enough. This one also jumps, but not enough. Okay, it is said that to break some significant level, the bar should be very large, and it is one of the ways to find support resistance zones. So for example, you just look at the large expansion bar and you go to the right or to the left to find some turning point, and you mark the close, the highest close at this turning point, and the high of that turning point. So basically this is the large expansion bar that breaks that level, and it is thought that the level should be a significant one. So we had much power to break this level, and it acted as support in history. Just out of curiosity, let's go to check this level. It was acting good. It acting as resistance, acted as support, acted as resistance, support. Well, this can be a pretty good, and we had large expansion bar breaking through it. This method can be a very good method for finding support resistance levels. Simply look at these large expansion bars and following things. There is also another method how you find these support resistance levels. It is simply a midpoint of a large expansion bar. So basically what you need to do is to zoom it in. Okay, and then you go to find that large expansion bar. It is basically the same. You have the midpoint of that 50%. These are the levels that you should pay attention to, these 50% of large expansion bars. They are basically very good. So majority of market participants pay attention to this large expansion bars. Basically is a signal of strength, of momentum, that market is most likely to continue the same direction. Okay, another warning sign is a so-called tail close. The tail close is this. Okay, second tail close. Let me find some example, maybe, if I have. This is the candle that closes at or near its extreme. For a bull bar, it is the candle that closes at high, and for bear bar, it is the candle that closes at low. Well, it's not quite a tail close, but it is very close to that. So this is the tail close. Okay, this by the way, this warning signs that should appear within the C to D leg. So what I see is the tail close warning sign here. So this is the good sign for continuation lower. The warning sign is stronger if it is closer to the entry point, if it is closer to potential entry. Then it is stronger, and it has less strength if it is in the beginning of the movement. So it can have the initial momentum, and then the momentum may fade out, and you enter as usual. Okay, so the tail close is the second warning sign. It is very simple, up to your discretion what you're supposed to be a tail close. For me, it is something that has a close at the top or bottom 20% of its range. This is the tail close. Then let's have the third. The third is very simple. It is gaps. Gaps that in continuation. Gaps continue this trading over the India. Especially those gaps that are unfilled. Unfilled gaps look this way. So we have some price, this is the bar, and we have another bar, and the distance between them is a gap between the close of one bar and open of another bar. it is a gap, but we can have some wicks, something like this, overlapping wicks, but you should pay attention between the close of one bar and open of the second bar. And unfilled gap is something that was not filled with the body of the previous candle, so it is something of this kind. When you have a gap and then price continues to the downside, this is an unfilled gap. Then and the last one is a steeper angle. Steeper angle number 4. So the steeper angle means that the angle is steeper than the angle of the A to B leg. Basically, it is said all these patterns are executing the AB equals CD patterns. So basically, it should be the same in time and in price. So you just measure the time of AB leg like this and project this time starting from C, and it should complete somewhere here closer or later than this, but somewhere here. But if you have 2 or 3 bars completing that, then it is called a steeper angle. This one would be considered a steeper angle. You see the completion. So you should delete your limit orders and wait for a confirmation. You see gaps, you see steeper angle, you see tail close, and you see large expansion bars. Delete your limit orders, wait for confirmation, or maybe sometimes skip these trading opportunities. Okay, and even if you have these warning signs, even if you assign some value to your patterns using these warning signs, those that can be entered with limit orders, those that should be confirmed, or those that should be skipped, even if you use this kind of grades maybe or whatever, maybe points or scores, whatever you create, even though you can have losses, you still can have losses. This is not a guarantee. It puts odds in your favor. It makes it slightly more probable for your entry to be hit. You can play some money management around that. For example, if it is no warning signs, then maybe you should open a greater position size, or maybe if it has lots of warning signs, maybe you should open very small position size or whatever. Or as I told you, you wait for a confirmation, you wait for higher high, which is my favorite, or you simply skip the pattern. Okay, hope you remember that because I deleted them. Okay. Now let's continue. Pound dollar is the next pair, and look at this daily 4 hour. This is what I'm talking about. The large expansion bar, basically, that goes to completion. What it tells that the reversal may take place higher beyond the calculated level. So you simply wait for completion, for a reversal to start. 1 hour nothing. And this cipher advanced formation, let's take it as an example and let's examine it. In the beginning of that C to D leg, we had a large expansion bar, yes, and then the momentum became smaller and smaller. See the body of the candles, they are becoming smaller and smaller and smaller as we progress. And I wouldn't enter this as a limit order trading opportunity. I would wait for a confirmation. Basically, what I do, I calculate the number of buys, and if it is less than 50 buys, I switch to a lower time frame. My favorite patterns are those that I have somewhere around 70 buys. So if I switch it to 30 minute, it would be very nice to execute a higher high entry strategy. So the higher high is this. We have this bar which is higher than this previous bar, so you simply enter when you have a higher high, and this is your reward. Of course, we pay this price when we trade with limit orders. Yes, we have the best execution, but we pay this 6 pips in order to be conservative, in order to have an extra confirmation, in order to be a bit safer. Of course, we pay that, and sometimes we don't pay it. Sometimes the reversal takes place within this range, and we even have a better execution. Sometimes the reversal takes place here, but sometimes we pay this price for additional confirmation. Okay, as we switch to 30 minutes, so let's see what happens today. Nothing is there, and 15 minutes, nothing. Let us switch to Euro Yen on daily. Wonderful winners here and there. It is what I'm talking about. This was a warning sign. Tail close, cipher formation. So let me disable it. The cipher advance formation. Look at this. Tail close, a tail close, and a potential gap. No, we don't have gap. Large expansion bar. We can also calculate that bar. It is 21.29, and if we apply the average true range at this period, it was 84.7 multiplied 2. Yes, it should be 1,600, but we had 2,100. Basically, it is qualified as a large expansion bar here. And what else did we have? We had this large gap from this close to this open. You see that? So we had warning signs. We have 54 candles. This is pretty okay. What would be my best execution method? So not only this higher high, but also wait for this double bottom, sorry. For this double bottom would be my best execution. And then after the double bottom completed, so we have one candle, we have second candle, only then enter the higher high of this candle. So this would be a very nice signal to enter higher on a break of this candle. It is daily. I don't trade based on dailies, but if it would happen on 4 hour or 1 hour, I'd enter that. That would be a very nice opportunity. Okay, because of 2 warning signs, I had made a decision to enter with a confirmation. Okay, let us switch to 4 hour, 1 hour invalidated, 30 minute nothing, 15 minute a potential butterfly formation. So pay close attention to this CTD leg, and what I typically do, I'm not placing any orders until we come close to enter. So I'm placing alerts. Euro Yen daily, 4 hour, 30 minute and 15 minute. We have butterfly. Let's go Aussie Dollar. This is the same on daily. And just examine this situation. You have this two bars that complete that small butterfly pattern. Obviously it is a steeper angle, we have a tail close, we have a large expansion bar, so you just avoid this pattern. And if you take this larger pattern, yes, that is completed a bit earlier, you have the same warning signs, and at the end you have also a gap. So the best decision is to wait for a confirmation for a higher high, for example, to get involved, or simply skip this pattern. So the butterfly from here was invalidated. You will save yourself so many losses if you will simply use this for invalidations, for not invalidations but warning signs. Okay, on 4 hour we have a butterfly advanced formation that just completed. It is a nice butterfly, and we didn't have any large expansion bars. Okay, let's calculate them. Simply place it this way. This is the ATR, average true range period 30. So simply calculate it. So it says it should be 24 pips. You see, it should be 24 pips, and this one was 49 pips. 24 is 48. Okay, it is a large expansion bar, and if we move here, it says that it should be 23 pips. 46 or more would be qualified. 57. Yes, these two are large expansion bars. Two warning signs. The one of them is very close to completion, and imagine that we didn't have it, this price action for now, for example. You don't know that this is a large expansion bar yet, so you make a decision. You had a large expansion bar in the beginning of the CD leg, but when you come closer, what you notice, you see the bodies becoming smaller and smaller and smaller, and well, you make a decision to either enter with a limit order or with a confirmation of higher high or something of this kind. And then you have that large expansion bar. If you made a decision to enter with a limit order, you are executed, and if you made a decision to wait for a higher high, then you simply wait. So the next candle is the nice opportunity, and you can make a decision to enter at this candle higher high execution. Simply, if you have that above that candle, then it would be very good entry for you. Let me zoom in this. Where is that candle? I'll try to play it one by one. So this is the candle. At the high of that bar, if it hits that. So the next candle is what? It is an inside bar. The inside bar should be ignored. When you enter a higher bar, the inside bar should be ignored. So you still have the same entry level. The next bar is basically an outside bar. If compared to previous inside bar, it is okay, but it didn't get you into the trade, didn't place you. And the next bar is okay. So it crosses that line and you are in this trade. So this is what is called a one bar execution. You just wait for a higher high. Conventional targets are the 3, 2 and 6 1A. Basically what you need to do, if price reaches the 3, 2, you close half position and you place your stop loss to break even, which is here. And then if it reaches the 6 1A, you close your second half. Pretty good method. Price is starting the movement, so you can join it. It is just at this level of 70 something. $71.98. Good at market pattern. Aussie dollar 4 hour. Butterfly advanced formation. It is not a butterfly harmonic pattern which has a completion at 127 XA. It is butterfly advanced formation which has a completion at 127 AB. It is a bit different. Okay, 1 hour is nothing, 30 minute nothing, 15 minute nothing. So we go back. 4 hour. Pound yen daily. Okay, we had that wonderful winner. You see, no warning sign, and gives you very fruity trade. 4 hour. By the way, in the end of this video I will explain you what are these levels. These are for target management that I'm testing for now. Trade management, not target management. Okay, 30 minute, 15 minute nothing. Dollar Canadian 4 hour. Very nice. It is still valid. It is still valid, although I dislike this broken CTD leg, but the pattern is still valid. And let me measure that. It seems to me that we also have a 3 drive pattern. So if you compare, they all coincide. One move, second move, and the third move, and they point to this area of 128.69, 128.70 on daily. So if it completes, it will be a good trading opportunity. So what is it? Dollar Canadian, yes. On daily we have a Gartley. I just type it Gartley. It is a unified Gartley, but I simply type it as Gartley. Okay, and on 4 hour we have a sci-fi advanced formation that is setting up, and I already have an alert for that. So what this alert means is that I'm not going to execute a limit order here, basically because of this warning sign bar. Yes, it is a large expansion bar, and because of this gap to the upside here. You see the difference, gap between this close of this candle and the open of the next candle. So if I zoom it in, the close of this candle happens here. This is the last close, and the open of the next candle happens here, the open of this red. So basically the gap is this much. You see the close of the previous candle, the open of the next candle. So this is the very large gap. I will wait for confirmations here. This momentum, upside momentum, may fade out, may decrease as price goes closer and closer to this support resistance level, which was perfectly calculated by that MPS5 pattern recognition software. That's why I place an alert and no limit orders here. Cipher. Aside from that, the cipher is valid, one of my favorite patterns. Why not? Okay, so what we have on 1 hour is nothing, 30 minute nothing, and 15 minute we have nothing. The gap is better seen here. So you see this, and you see the open price next. New Zealand dollar is the next pair for daily trading traders. We have a Gartley that is setting up. Of course, if price goes to the upside, I don't know if it will go to the upside, so I will never advise you to buy it in anticipation that it will complete. So potential Gartley is simply a potential, it is not a pattern yet. Okay, so this is what I was talking about. When you see these large expansion bars, you'd better avoid that trading opportunities. For example, you don't have it, and then you see that this pattern is evolving, so you delete all your limit orders. Don't try to catch the falling knife. Okay, but what I like these situations when you have that nice moderate movement, and this is also an ABCD pattern, whatever, pointing at the same level. Yes, I like this situation very much, and I will trade them with limit orders. Okay, and that's why they are very profitable. I call them fruity. Okay, so this one was invalidated, 15-minute, also the same pattern. This was simply a losing pattern. I don't see any warning signs here. I could execute this either with limit order or with a confirmation, but it simply was a losing pattern. Just didn't work. As I told you, even if you use all those warning signs filters, it's not a guarantee. Okay, so what do we have here? We have a failed pattern, and of course if you use these warning signs filters, this trade should be filtered, of course. You shouldn't have any losses on this pattern. Then go to 4 hour, same here. If you use that filter, it should be filtered. Then if you trade this larger pattern, what I suggest you to use is that kind of 5% completion or something. For example, you see that 5% on my Fibonacci. When the pattern starts the movement, simply didn't complete by a few pips, yes, and then it starts the movement, it reaches targets, then maybe it is already missed pattern. We should understand that these zones that are calculated by the MPS5 pattern recognition software, they are zones. Sometimes price may start earlier, sometimes it starts a bit later, but we see some reaction around this level. So 5% it would be a pretty good filter. So what I mean, if we have already the movement that completed, so you should not enter at this second, especially when you have these warning signs. Okay, and 1 hour we have nothing, and 30-minute a potential butterfly should place an alert. Pound OC 30-minute, so we have daily, 4 hour, 1 hour, 30-minute butterfly, and it is pretty good butterfly. Maybe this gap is something that creates a warning sign, but it is within the AB leg. The AB leg is not the CD leg, so you should look at warning signs within the CTD leg. Maybe not the one that should be traded with limit orders, but if you execute on 15-minute with a high principle, it could be a very nice trading opportunity. Okay, it is brown because I'm not going to trade it less than 30-minute, so it is only 30-minute trading pattern. The next, Euro GBP, all those browns are traded on 30-minute as minimum. Daily, then we go 4 hour, you see that gap to the upside and moving higher, 1 hour, and 30-minute, so nothing here. Then we go to Euro Aussie, Euro AUD, and here is the pattern that sticks out but is not detected by automatic algorithms. It is this unified gap, and look at this pattern. We have two things that should be considered. First is the ABCD completion, like this. It points to a higher position than the pattern completion, yes, and also these large expansion bars closer to this completion levels. So steeper angle is the same. So if you compare that, maybe rectangles are a bit better to draw it. So it should complete here at 20th of September, but it was completed on 24th of August, a month earlier, so it is a steeper angle, and that's why the completion may take place, the reversal may take place higher. So maybe it can happen here, especially if you pay attention to this, and you see this wicks to the upside. 1 wick, second wick. If it closes as a rejection candle, rejecting from this level, yes, then it could be a very nice opportunity to get involved. Still valid, as we didn't hit the invalidation, but already well, it is rejected. We don't have a close above the X point. And you know, when you have that higher high and higher close, you have the continuation. Okay, pay close attention to this situation. Maybe you should look for some minor patterns here. Euro Aussie, Euro Aussie, Euro AUD, Gartley on daily. So I was using manual because it was sticking out, but of course it can be found by some other algorithms. We have plenty of them. For example, this stochastic, simple, the first one, and also it is found by RSI, commodity channel index, and Williams percentage range. So I suppose the price extreme algorithm was the only one that didn't see it. So although my price extreme algorithm is my favorite one, you shouldn't skip these patterns. Okay, you can also switch to group 2 and try some other algorithm. It is also see by close price algorithm, not fractals, by ATR algorithms. Pip distance, you should set the pip distance here, and percentage. Let us set the percentage. I like the percent algorithm on dailies. So what it should be, should go percent, and the distance, percent change, it is set to 1%. 3% change would be very nice. Oh, it is very large. 2% maybe. 2% change. Would be better. Oh, well, still not seeing that. And then maybe 1% change in price. It all requires testing, of course. You just go test these patterns. Okay, 1% is too sensitive, 2% is not that sensitive, but look at the 1%, yes? Look at this winner after winner, winner, maybe a loss, but of course you should keep in mind that warning signs, it is something that good to pay attention to. Okay, let me go back to my conventional rules. So what do we have? We have a Gartley that is close this make or break level, close this invalidation level. It rejected once. If it rejects for the second time, wait for this daily close to see if you have a rejection or a breakout. On 1 hour it looks like rejection, and we also gapped to the downside. From here to here we gapped to the downside. The gap is seen much better here. Okay, so this is Euro Aussie, a Gartley pattern. Let me have manual drawing to point that pattern once again. Okay, here it is. I will tell you what are these lines, what are these levels in a second. It is simply the trade management that I am testing for now, and if it works I will include that levels into standard package of the MPS 5. if it is okay, but for now they are simply the levels. Don't pay attention to them. Okay, we have so many pairs ahead. Let's us accelerate slightly. Aussie yen daily 4 hour, nothing. Okay, this didn't complete. 1 hour and 30 minutes, nothing. So Euro Canadian, start from daily, we had that pattern invalidated. 4 hour, we had a loss, I took that last week. 1 hour, another invalidated pattern. Of course it shouldn't be traded because of that wide expansion bar. And then what else? This tail close candle, they are all signals not to enter this another tail close. They were all signaling not to enter, or maybe wait for confirmation. So if you were waiting for a confirmation, you were executed somewhere, nowhere, because you didn't have a lower low in the completion zone. You had it outside of the completion zone. So the 30-minute wonderful winner, and it had some warning signs. Maybe you were waiting for some confirmation before you enter, maybe not, but it was wonderful movement. Euro Canadian was this, Pound Canadian. Okay, this is the pattern, that Pound Canadian. It is a GBP CAD butterfly. What I see is very moderate movement. We don't have any steeper angles, we don't have any warning sign except this tail close candles, maybe few minor gaps here, and not many. Okay, at first glance it looks very much okay. Even if you look for a confirmation, look at this double bottom, look at this break of the neckline of the double bottom, you can execute the pullback strategy, one of those pullback strategies. Wait for a pullback after the break and then execute that to the upside. Very simple strategy. As for conventional targets, they are this here, which is 72.86, and second target is 77.18. So the two conventional targets for this pattern. Let us switch to daily. Yes, oh sorry, it was daily butterfly Pound Canadian. What I type here is butterfly. Then we go to 4 hour, have nothing. 1 hour is nothing, and 30 minutes. I suppose the cipher was invalidated, so I'll simply check it this way. If you draw it manually all the way to the upside, it is invalidated. Okay, I don't go lower than 30 minutes. Then we go to New Zealand yen daily. 4 hour, 1 hour, 30 minutes, nothing. Euro New Zealand daily. Okay, 4 hour, a potential unified Gartley. Pay close attention to the C to D leg. Do not enter if you have these large expansion bars. If you have warning signs. 1 hour, 30 minutes. Okay, nothing. Canadian, start from daily, potential butterfly, pretty good butterfly. Canadian, no warning signs yet. On daily, if you trade based on daily, then okay. If you simply will use it as a confirmation bias or whatever, you can use it as well. 4 hour, look at this butterfly. And once again, guys, this is the importance of this gap to the upside, this large expansion bar, these signals that tell you that you maybe should wait with limit order trading, but look at the confirmation. Okay, 1 hour, nothing's there. And Aussie Canadian, we have this daily, then we have this 4 hour, and then we have 1 hour. Okay, so well, that's it for today. So far, what are the results? We have these patterns: butterfly, butterfly. Let me fit them. Butterfly, currently cipher. Cipher is the one that is Aussie dollar for our butterfly, and dollar Canadian for our cipher is something that I would personally pay close attention to. Aside from that, we have some other patterns. Okay, I will share the link to this Excel spreadsheet in the description. Now let's go back to these lines. What are these lines for unified godlies? Basically, let me draw it. Oh, should go to manual. So suppose it is a unified godly, yes. So this is the completion of a potential pattern. So what we have is the stop loss, which is 5% below this X point, the invalidation. It doesn't matter, but what the software does, it calculates the distance from here to here, and the distance is 1033. Well, it says 1024. I was close with my calculation. So the half of this distance is 512. So we have this distance, which is 1024, and we have its half, which is 512. So what is this idea of trade management? Basically, you wait for price to hit this level. When it reverses and starts the movement and hits your half of your risk, this is your total risk. And if you know, compare, this is the target 1 and target 2. Target 1 is this one risk, 1-to-1, and target 2 is the second risk. Okay, so when half of your risk is hit, you cut your loss by half. You simply move it from here to here. Your stop loss is moved from here to here. When your first target is hit, you also cut your loss. You make it break even. You close your half position and make it break even. And then you have a risk-free trade, which will do one of the two things. It will either hit this level or it will go back. So I did some backtesting with this trading method on euro-dollar only yet. I only started, and I was using limit orders. I was not paying attention to any warning signs, simply without any filtering, simply mechanical using of limit orders. And what I have is this. So let me go to Excel spreadsheet and I will show it to you. Okay. So this is the target 1, is the blue line, and the target 2. I tell you, it is aggressive trading with this trade management. And we can see it is trending to the upside, yes. It is pretty good, trending to the upside. Why not? Well, I will continue doing that. Of course, it is without any filtering. If filtering is applied, the movement becomes much smoother if you use warning signs to execute. And the warning sign does this. It prevents you from limit order trading. It also warns you to use a confirmation, or it warns you to skip the pattern. Of course the pattern will be skipped if you have one candle movement invalidation. Okay, when you use warning signs, you should also have some rules for picking the optimal time frame execution, and because the pattern itself, it should not be less than 30 candles, as Scott Carney states. I prefer the pattern total number of candles within the pattern should not be less than 50. So if we have the pattern this way and it is 37 candles, what I would do, I will stop my MPS 5 and I would switch to a lower time frame to execute this pattern. So you will see that I'm executing it here, looking at these candles. Okay, looking for some confirmations, higher highs or whatever. This is only for execution. And there is a wonderful concept that is called a terminal price bar concept. You should pay attention to this concept as well. For example, this is a completion level like this, yes? So the terminal price bar is the bar that completes your pattern. So you wait for this candle to close and you start looking for your execution after the next candle opens. So when you switch to here, and let me go back, when you switch to your 4-hour, so you only execute after this, to the right side of that. You do not execute earlier, you only execute when this opens. And so what you are looking at is maybe a double top bottom, maybe higher high principle or whatever. This may be good execution. By the way, I calculated this wrong way. If this is a terminal price bar, if I calculate, it was 56. So basically it should be executed on this very time frame, on daily, not on 4-hour but on daily. Well, that's it. Hope you found something useful. Hope you had some additional information, some tools that can improve your trading results. I will drop the link to my website in description. You will find the information about my software there, complete demonstration and tutorial on how to use them on the front page. Also, you will get this learn the patterns. If you are interested to learn these patterns, then just go to this learn the patterns, click to whatever pattern you are interested in, and you will get a complete tutorial of how to identify these patterns. Here it is, criteria 1, criteria 2, criteria 3, how to execute these patterns, this is very important, and how to manage these patterns. Because the identification is only 1/3 of the strategy. The execution and trade management are the something that is left. And guys, this is very important again. So if we consider this circle as the total success, and we know that 60% of our success depends on our psychology, yes, we know that the 30% depends on our money management, yes, and the 10% that is left depend on our strategy. And this strategy consists of these 3 parts. One of them, the identification, the second is execution, and the second is management, the trade management, how you manage your trades. So if you only have this, so just compare of what is this fraction compared to this total, what else you need to become successful in trading. So it is much better that you have all 3, but if you only concentrated on this and you forget about this, and also you forget about this and this, because when you basically are practicing this and it consumes all your time, you have no time left for this, you have no time left for this, you don't have time for this, and you don't have time for this. You are practicing something. So the MPS 5 won't actually resolve all problems for you, but it will eliminate part of that work. It eliminates the identification part, so you don't need to think if the pattern is correct or not or whatever. You don't need to do that. MPS 5 does this for you, and you may be sure that the setup, the identification, is absolutely objective. It draws the patterns for real-time trading exactly the same way it was drawing them for backtesting. So you can be sure that what you have backtested will be drawn exactly the same way. And this is very important. Although it is a very small part of your trading success, but the identification is very time consuming. So you first need to learn the patterns, remember all those ratios, and then backtest them. And it is very time consuming. That's why MPS may be very helpful. And I have some good news for you, that starting from now you can pay by installments to have that MPS 5. You simply rent MPS Pro, yes, and every month you actually pay an installment, and the retail price is something that is paid in 12 months. So you have an opportunity to pay by installments, renting the MPS Pro. In the end of 12 months you get your copy, lifetime copy that will never expire. Okay, well, this is all the news I have for you today. If you like this video, hit that thumbs up button. As usual, subscribe to my next episode and type your comments below. And until then, good luck and good trading. Hope to see you soon.